This is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, November 24th, 2023. First of all, happy Thanksgiving, everyone. Hope you're enjoying a good time wherever you are. Perhaps the biggest story this week is what didn't happen. Tuesday evening, PF Growth Portfolio holding NVIDIA released its third quarter results. Had those numbers come in beneath Wall Street's expectations, then that could have triggered a sell-off in tech stocks. So here I'll show you a chart of NVIDIA. And this is at the close on Wednesday, since yesterday's a holiday. You can see during the past month, I'm going back to October 23rd, so basically exactly a month. Actually, NVIDIA has jumped up quite a bit. It released earnings that were good. Company also cautioned about maybe in China sales slowing down because of trade restrictions imposed by the Biden administration. Nevertheless, that's still a very nice chart. And of course, we bought NVIDIA about 13 months ago in October, when it was around 115, and now it was over $500 a few days ago. Even still, that's quite a chart. Fortunately, that didn't happen. Instead, the company reported a big beat on earnings, coming in at $4.02 per share, which was nearly 7 times last year's third quarter performance. In addition, the company raised its guidance for its full year revenue and gross margin. However, NVIDIA also cautioned that sales in China would decrease during the fourth quarter due to trade restrictions imposed by the Biden administration on its most advanced processors. The company said it will have no problem finding other markets for those processors in the near term, but it could have an impact on its revenue next year if those restrictions remain in force. That news sent NVIDIA's share price down slightly the following morning, even though the overall stock market was in positive territory. Perhaps that's really the big story this week. When politics collide with global commerce, Wall Street tends to assume the worst, since free market economic forces are not allowed to function as they should. That dynamic may pose a bigger threat to the stock market next year than inflation. Since 2024 is an election year, we will most likely see heightened political activity in a number of areas, including monetary policy, international trade, and fiscal spending. Hopefully, Wall Street will tune out the rhetoric and focus on actual results. Speaking of actual results, today is Black Friday, so named because many retailers go from being in the red, or unprofitable for the year, to being in the black, or profitable due to holiday shopping commencing the day after Thanksgiving. Now, it's been a long time since that's really been the case, but Wall Street will be examining today's sales figures closely for signs of a slowdown in spending on what is still regarded as a critical day for retailers. Despite a growing chorus of naysayers on Wall Street that holiday sales this year will disappoint, that's not how they're voting with their money. Arguably, Amazon.com is the single stock that is the best proxy for retail consumer behavior in the United States, and its share price has increased 20% over the past month. So here's Amazon's chart. Again, this is year to date. You see this big dip here about a month ago, but look at the big rise since then. So, clearly somebody believes that Amazon's going to be posting some solid results here in the near future. Fact of the matter is that the CBOE Volatility Index, or Fear Index, is at its lowest level this year. And remember, so I'm going to show you the, where are we here? Here's the VIX. Remember, a lower VIX means less fear, higher VIX means more fear. And here again, chart year to date, you can see a big spike way over here in March, dropping, then a spike in the fall when we got some hot inflation numbers. But again, look at the past month, huge drop in the VIX. And at the same time, the S&P 500 index is close to hitting a new high for 2023. So let's look at the S&P 500. And again, year-to-date chart had a nice run up till about the end of July, then a steady drop. But look at since the end of October, big jump. Not quite at where it peaked back at the end of July, but getting very close. If Wall Street really believed that consumer spending was about to hit the skids, neither of these things would be true. When it comes to Wall Street, do as they do, not as they say. Now that's this week's PF update, and I look forward to talking to you in another week. Thank you.